This is the call to action for the best tech portfolio strategy designed to outperform the technology benchmark index. You can see that the best tech money tree avatar on the left is much more attractive than the technology sector benchmark it is designed to beat. The crown is bigger and more attractive. The trunk is taller. The pot has a similar shape except for the rim of the pot, which appears smaller and a less attractive color. This is the call to action. The first action is to review whether or not there are any stocks within the portfolio that have that attribute that's particularly weak. To investigate that, we go to our maintenance items and click on the link for portfolio companies, which displays the avatars as a function of how large the stock is within the portfolio. So our largest position is Electro Scientific Industries, and paging to the bottom of the list, our smallest position is Cray Inc. So we're looking for deteriorating rims of pots, and all of these look pretty good, not too much to get concerned about. These are all looking pretty decent. That one could use a bit of work. We'll come back and look at that in a minute. I want to look at that bottom rim, doesn't look too attractive. Let's take a look at United Technologies. The chart represents on the left-hand scale the performance of the stock relative to the broad market index. And so from 2006 until 2009, the share price of United Technologies outperformed the broad market by about 65 or so, 70% possibly at the very peak. Then starting in about 2011, the shares began to perform badly, and they've performed consistently badly until 2015. And then more recently, they've kind of wobbled around and not done very much. The red line, which is the right-hand scale, is what we call the dominant factor. That is the factor that has the highest degree of correlation and tells us the most about the likely direction of the share price. And that factor, which is receivables turnover, is decidedly negative. So that would suggest that this stock should be sold all by itself. We can also sell it purely by observing that the rim of the pot is not very attractive. The trunk is pretty short. The crown of the tree is not very attractive color. So all that's the justification for kicking it out. But we can get into more detail by clicking on the avatar factor list, which will give us the correlation details for each of the factors that are represented by the avatar. We're particularly interested in the gross profit margin, which has been 79% correlated with the share price with a 5-quarter lead. So that's a fairly powerful, pretty reliable factor. We click on that for more detail, and we see that the factor has been falling for 1, 2, 3, 4 quarters. So that 5-quarter lead has just about been used up. The stock has not performed well. The avatar doesn't look particularly good. This looks like a clear candidate for selling. To sell it or to indicate to Otos that that's our decision, we would click on Edit the Portfolio. That'll show the position. We have 100 shares, and so we want to execute a trade for minus 100 shares at $128, and of course at today's date we'll update that, and that completes the transaction and tells Otos that the stock has left the portfolio. Returning to our profile, again, we want to review our avatar. And this time what we're interested in doing is, now that we have generated some cash in our portfolio, we have room to add one stock. We want to find a company that's got that attribute that's particularly attractive. So again, we'll go back to our portfolio companies, find one that's particularly appealing and has performed particularly well, such as Amazon. Lovely picture. We'll go to the avatar factor list for Amazon. We'll choose the gross profit margin, which is the top rim of the pot, which is 94% correlated with a 3-quarter lead. So a tremendously powerful variable there at Amazon. Click on that. Click on Better Than This, and what's displayed is HERCO companies. Click on that link, and it displays the historical record for HERCO, again with the performance of the stock on the left-hand scale and the dominant factor, in this case inventory turnover, on the right-hand scale. Looking substantially better than the average of the technology sector index that we're out to beat, and has got an improvement in the attribute that we're out to improve. Otos says that the shares are a bit extended, expected to decline about 16% in the short term. So I can either sit on my cash and wait for the stock to come to me, in which case I would be requesting from Otos to send me an alert when the stock price drops to a discount. That would be 16% from now. Or I can go ahead and make the decision now, which is what I'll do. I click on my Edit the Portfolio link. It gives me the number of shares that is consistent with my average portfolio position, so I can adjust that if I want, if I would choose to. The current price as of last Friday, and the current date. I click on Update, and that adds HERCO to the portfolio, and that completes our call to action around the Best Tech portfolio strategy. The avatar will be updated, and the profile will be updated throughout the next weekend update, and a email is generated to indicate to you that your portfolio has been updated. Thank you.